What's going on, guys? What's going on? Good afternoon, everyone. Will, what's going on, my guy? What's going on, Woo? Apple? All right, we'll take a look at it. We'll see what's going on. I gotta say, today was a shit show. I mean, there's no cute way of saying that. Today was absolutely a crappy day in terms of just straight price action, putting us in a box, in a blender for that matter. But here's the key thing to know is that you also have to be aware of the fact of when there is a unknown variable out there that the market is waiting on. And that's particularly exactly why we're getting stuck in the range that we're pretty much trading in right now. It's like, all right, we want a trend to be taking place, right? We want that trend in which it gives us a directional move. But when the market is waiting on that unknown variable, there is not particularly going to be necessarily a range all the time ahead of that catalyst per se. All right. So until we know that job data that's going to be coming out at the end of the week here, it's more than likely that yeah, we're more than so favorable to the downside, as I'll get into SPY here in a second. But we're also going to get these very reflexive bounces in which it's going to basically chew up your premium. And that's basically the factor of being in a blender, in which your premiums, once you buy it, you typically end up seeing it go literally flip from green to red rather quickly. So that's something that you want to be mindful of. But the back end of that is that you want to be mindful about taking your profits rather quickly, at least until we see a trend established on the back end of our job data that's supposed to be coming out. All right. So that's just something to pretty much keep in the back of your mind as we go through the next day or two until we get that data out the end of the week, until we get a trend established, and then we're likely going to say, wow, what a candle, and we'll get a direction in the market. All right. So that's something that I pretty much wanted to get out there, pretty much just give you guys a pretty quick gist of things to be mindful of. As I get into those tickers that you guys just mentioned here, and I'll get into those in just a quick second. I just want to give you a quick look of what rundown of what I'm looking at with SPY. We do have a little bit of a topping formation that has been taking place for the past 3 days or so. The other thing that just crossed my mind as well as I actually say when I get to Apple, but you do have a little bit of a seesaw action. You had a nice little double top action that took place dating back towards Friday of last week. And so that's what we've been regressing from these past 2 days here so far. And so more indication is the fact that all right, since we already had a double top here off of the daily so far, it would be indication to trade down towards the bottom of what is so called our range until we get a better trend established in the market, whether that be to the upside or the downside, right? But as of right now, our positioning would be towards the downside, in which case we're gonna end up testing the bottom end of this range, and that will be down towards that 390 low, and that would also be retesting our low from November 17th. All right. So that's exactly what it is that we're pretty much establishing. Those of you that have been in the dojo, you probably also heard Avery pretty much targeting 391. I mean, bottom end within 390, 391, pretty much your wick fishing there for that matter. But that is basically the bottom end of this range that we're looking to trade towards ahead of the job data. And so what's going to be the reaction once we get down to that 390, 391 level? All right, well, if we establish the bottom end of this range, then you would pretty much anticipate that we're going to get a reflexive bounce, and that'll be where we could potentially end up right where we are at this very moment on SPY. And that'll be the middle of this entire range from where we double top just under 403 to our bottom of our range at down towards this 390, in which that's about a $13 range that you're looking at from the bottom to the top that we've created basically within the past 3 days or so. All right. So that's looking at SPY. Let me actually get into the few names that you guys actually mentioned. And as I was gonna touch bases on Apple, I was actually going to pretty much mention the fact that it's going to be an interesting factor for Apple here, especially Wu that you asked. It's going to be interesting about the fact that if the 3-day rule is going to apply to Apple, right? Those of you that are aware, most commonly, once you see a stock bleed out for 3 consecutive days, it's usually a known common factor that the stock is going to get a reflective bounce. Does it have to get a bounce in which we see a green day particularly? No, it doesn't have to happen. It's just something that's typically common, but obviously the bigger factor as well is that this is not a common type of market environment that we find ourselves in right now, right? This is basically a bear market rally that we're pretty much been establishing for the better part of what was most of November. But now, all right, is the bear market rally going to continue on the back end of job data? In which that's really what the question mark is. All right. But interesting fact, we already had 3 consecutive red days on Apple. Do we get the bounce tomorrow or not? And here is also the question mark that leaves you pretty much dangling, right? In the middle of especially the structure that Apple has you, is that you have a gap fill that needs to be completed below, in which you've already entered, and then you also have a gap fill above that we created from Monday on our gap down over the weekend. That's pretty much the indecisive moment that is leading you with Apple. Now, here would be pretty much your leading indication as to where the direction of Apple is headed, short term for that matter, right? I gave you the analysis in SPY in which more than likely we should trade down towards the bottom end of our range, in which it was trading down towards 390, 391. Now, that indication of SPY going down towards that range would give you also the indication that even if we get any kind of reflexive bounce off of Apple, maybe we get a dead cat of some sort by tomorrow morning, then I would look to see that this 142, 142 half remains our overhead resistance, in which case we're going to likely fill the gap to the downside first before we can even look and probably estimate the fact that we're going to get a strong enough reversal to fill the both gaps that are back to the upside. All right. So basically, conclusion, I would anticipate we get the gap fill to the downside. I do have intermediate support within that gap fill to the downside, sitting at 137.17. That could also be a level in which you see that reflective dead cat type of bounce, and then you go for full on gap fill, in which that'll complete down towards 135.19. So to pretty much cap off what's already been 3 red days for Apple, is it pretty much un unreasonable to see that Apple ends up dropping another $5 to $6 tomorrow? No, that would not be surprising to pretty much cap off what's already been a consecutive bleed out for Apple these past few days since Friday. All right. So that's pretty much giving you the analysis, and basically to answer your question directly, Wu, I would anticipate we likely trade down at least to 137 towards my median level of support, or towards full gap fill sitting down towards 135.19 before we see any type of meaningful reversal. All right, but that is your direct answer to your question. Prachi, how are you? Take a look at Baba. Baba's actually pretty much still chilling. I still have a ascending broadening wedge action that's taking place. I still have it pushing to the upside. In terms of levels, then that you'd have to refer directly to the newsletter to get the direct levels in terms of your resistance, your support levels directly. But I still have this trending up primarily. More so trending up towards 85 is the most details I can probably give to you as far as this being a direct newsletter play. All right. The other one that you mentioned was Moderna. Let's take a peep at Moderna. I have not looked at Moderna in quite a bit, but the last thing that I do remember is that there is a massive megaphone that's taking place on Moderna. So you can basically see the resistance level, support level, rather well identified. In terms of a support, and this is where I was actually going to take a wait and see approach. I wanted to see if we would get down toward this 166 mark on Moderna. 166 was a support level I wanted to see. As you've already seen a lot of regression off of this name thus far, I wanted to see if we could trade down to 166 and then potentially look to see if that 166 level is going to act as a meaningful support for a reversal back to the upside. In which case, if you find that you have a meaningful reversal off of that 166 level of support from Moderna, then you're looking for to confirm your breakout above 179, and above 179 you already have a well-defined overhead resistance that you could potentially target up towards 208 to 210 being that zone of resistance. All right, to test the top of the megaphone. Otherwise, vice versa. If you don't end up holding 166, then you already established that, all right, I broke through meaningful support, then we're likely going to trade down. And the next level of support that I'm watching here is going to be down towards 159. All right. So that's basically as simple put as I can pretty much tell you from Moderna. But yeah, that 166 level is the most intriguing level. That's what I do want to see if we could trade down to it. But for a breakout confirmation, you're looking to pretty much regain over 179, and this could pretty much see a continuation of what has been a monstrous type of uptrend so far. All right, let's see going down the list here. you mentioned Caterpillar. Let's take a peep at Caterpillar. Let's see what's going on with her. So, first thing that I could pretty much identify here, and I believe I had already had it drawn out, was I do have an ascending broadening wedge action that's taking place on Caterpillar. All right. Now, level to watch for a breakout to the upside, meaning also your overhead resistance, is sitting at 237 half. So through 237 half, you watch for that to break. Ideally, I would say that if you're looking for the downside here, particularly, I would look to get into puts at 237 half. If you do get any kind of continuation of upside, 237 half, you look for your put entry, and then you look for your stop loss to pretty much be this wick high of 239.63. Vice versa, if you end up breaking over this 239.63, then it's likely the case that you're going to see continuation of this overall uptrend, in which case I do have resistance sitting up towards 241 that you're going to end up testing. For continuation above 241, your next PT is sitting at 244 and a quarter. All right. So that's pretty much what I would say. But given the fact that this is typically a bearish pattern, that's why I pretty much gave you the idea of looking for a ideal put entry at 237 half roughly. I would favor the fact that you're gonna likely see maybe one nice push, one nice gap up tomorrow morning. If we see any kind of reflexive bounces yet again tomorrow, and then you look to see your stop out being that wick high at 239.63. That's how I would go about it. In terms of breakdown to get your breakdown level, you're watching the breakdown below 234 and confirm below 232 to trade this down to 226 support level that I have, which is also towards your trendline support of this overall ascending broadening wedge. All right. So that's pretty much a simple put for that one as well. Other than that, though, I don't think there's much else in terms of individual tickers. I went through Apple was a primary name. I could probably look at, say, a name like Tesla here. Bottom level support that I'm going to be watching for is this 176 mark. Below 176, I do believe that it's going to be more so than favorable to end up getting this entire gap fill that will take this down towards this 169 low. That's something that else that you can also watch. But given the fact that, and this is pretty much the cause and effect, and I usually say, look at your leaders in terms of your tech sector, looking at Microsoft, looking at Tesla, looking at Apple. If we know the fact that Apple's going to be likely leading us to the downside, it may not be the fact that we end up seeing Tesla get such a rollover to end up filling this gap all the way down to 169. So I would wait to see how it pretty much reacts towards this 176. Watch to see if that ends up acting as a intermediate support short term here. But more than likely, at some given point in time down the road, yeah, that gap should end up getting filled down towards that 169. It's just going to be a matter of how long it takes to end up getting that gap fill, right? Because I can see a scenario in which you stay within this range of 176 to 184 here, down in this range, until we get a trend established in the market on the back end of our job data. All right. So that's looking at Tesla. The other name was also Microsoft. Looking at Microsoft, pretty much another one that's been a little bit of in a blender right now. You do have a little bit of a bear pennant that's kind of taking place here. It probably looks a little bit better here off of the hourly, but you do have a little bit of a bear pennant that's taking place right now. If I kind of draw it out, give you a quick outline of that bear pennant, that's going to be something that's going to be rather intriguing here tomorrow. If we do end up breaking down below on this bear pennant, I actually have short-term support sitting at this 237 half mark. Below 237, then that will take us down towards 234 is my next meaningful level of support, in which that's going to be an interesting ticket tomorrow to watch, especially how that wedge is closing in here. So I would keep an eye on that one going into tomorrow. That'll be a more intriguing one rather than looking at a name like a Tesla, which I said it could be a little bit more range bound, particularly you may end up finding more of a bigger, larger directional move to trade off of between Apple and Microsoft tomorrow. So if I'm looking at the leaders particularly, yeah, those two names is likely going to give me more so a better trade opportunity tomorrow than looking at a name like a Tesla tomorrow. All right. So that pretty much kind of sums it up in terms of giving you more so the direction of the market, giving you an indication of the three leading, no, biggest tech names in the tech sector more so. The other thing that I was pretty much pointing out was also the XLE, just looking at a different sector as well to give you that pretty much another sign of indication here. I was watching off of the XLE, and I believe the daily kind of give you a better image here. But just to sum it up really quickly, you do also have a wedge that's closing in on the XLE. You have a well-defined trendline support, well-defined overhead resistance. As that wedge is closing in, you do have a little bit of a rooftop type of formation. And when I say rooftop, if I get into the 4 hour, you can see it probably a little bit better as I zoom in. You have a well-defined incline of resistance and then your decline of resistance as well. That basically gives you that little bit of a V shape topping formation, a rounding top that you want to call it as well. In which case, I would more so favor the fact that this should end up breaking trendline support. At what given point it's going to break below that $90 mark is the golden question. And I do have this coming down towards my first PT at 87.95 is what I'm watching. So this is going to be another one that's intriguing in terms of looking at sector rotation, how that is going to play, or do we see a broad market sell-off? That is something that's going to be definitely on my radar tomorrow on my watch list that I'll be taking a look at. All right, but I think that kind of sums up rather brief here today for our watch list in terms of just our post-market analysis. Let's see what the market has in store for us, what kind of blender they put us in tomorrow. But other than that, appreciate you guys all joining. Hopefully I was able to help you out. Woo, you and you, uh, appreciate you guys. Hopefully I was able to help you guys get a better analysis on those tickers that you requested. But I will leave it right there. You guys all have a great afternoon, and I will see you guys tomorrow.